it seems that I may be able to get my way in, fudging this, fudging that, but then there's a question of how long do I stay? Do I have to quarantine before? Do I have to quarantine after? And I mean, Jonathan and Claudia have been working, tirelessly on this, and we can't get real clear answers. And I absolutely want to be there. I just can't afford to get stuck there. And that's kind of the issue right now that we're battling through. So it's looking unlikely. So let's assume I'm not. Let's plan accordingly. And and if I happen to pull it out, that's great. But I would plan right now probably for me not being able to attend. And I'm very disappointed. And I will continue to work on it, but it's not looking good right now.
Okay, well, we'll hope for positive news in that regard, and hope that you can attend, of course. One of the, so that of course is one of the objectives for us, to get to know a few more people there. And we have some things lined up in that regard. For those who are attending, there'll be a dinner on the Sunday, October 10th. And I know, Jonathan, it's already been organized, and Claudia, you of course have been the one to put in place the arrangements. It'll be the same location as the DIP group, if I remember correctly, the same location.
Exactly.
So there may also be opportunity for us to meet some of those folks as well.
Exactly. Well, I got 4 people listed at the moment. That is Joe. Hopefully he will be able to be there. You, Daniel, then Ian and Pat. I don't have anyone else. It's just 4 people, including Joe. Or have I missed someone?
Okay, well, I believe our colleagues from Italy are actually arriving the next day. If I'm correct, they won't be there on the Sunday. And I think Bill in Paris is also planning to arrive the next day. So that's right, not on Sunday. I don't recall whether Bright Ridge was planning to attend, or is there anyone else who was planning to attend?
No.
Yeah.
No, Bright Rich is not attending. So I had Daniel, Joe, Max. I had Hans Peter also responding, Bill Beauclair and Ian, and Antonio. But like you said, Daniel, a few of them weren't getting there till Monday.
Right. Okay. Well, we'll keep the DIP crowd warm as well for everyone. So that's good. There'll be plenty of people to meet. Jonathan, shall we move on to the Corfac conference in Chicago, which was held last week? Is there any updates with perhaps to share, or Joe as well? On that?
I mean, it was really obviously fantastic to see our colleagues in person for the first time in 18 months. I'm not quite sure what the final count is, but going in, I think we're around 120 attendees. Great sponsors, great presentations. We had some good evening events as well. The local host, Darwin Realty, I mean, did an amazing job. I mean, they really set the bar high going forward for future conferences. And I guess Jonathan and I had a little fun with Jared from Las Vegas, and moving ahead, they had an event for us on Friday evening at a rooftop bar called The Wit that was phenomenal. I'm actually using one of the gifts that we all got, a little Darwin Yeti here that they gave away, and they couldn't be a better host. We had a great breakout session. The attendance was different. This is something I think we should put out. There were less firms in attendance. A lot of firms had some concerns because of the pandemic and basically bailed out. But the firms that did attend sent a lot more people. And we probably had one of the biggest next gen attendance at a conference, certainly that I've ever seen. We had a ton of under 40s, a lot of new faces that had never been there before. Again, the general vibe was very upbeat, pretty much across the board. Everybody was very, very busy. There was a lot of activity. Obviously the industrial market in the US is on fire right now, and it continues to do so. Last numbers I checked, year to year, we were up 30% for rates in industrial this year, just off the charts. And retail and office actually had a net positive gain in the last quarter, 1.5%, but we'll take it. You know, of course, multifamily and hospitality has been very busy as well as, and retail is actually, you know, I mentioned is up a little bit too. So everybody was busy. Everybody seemed to be doing deals, good activity. We, you know, our new firm from Austin was in attendance with a strong contingency, and they were very active. A lot more people involved in, you know, in the activities, and generally it was a really good vibe. If anything, it was probably too short. You know, we normally do a 3-day conference, you know, because of the situation and because of the quickness we pulled it together. We did it in 2, and I think I kind of think we could have done a little more, but that's a good problem to have, not a bad one. So, you know, looking forward to Las Vegas, looking forward to hopefully seeing the international contingency then. If you guys have any questions, or Jonathan, if you want to add anything, fire away.
Joe, I think you covered it really well. I mean, one other thing besides Daniel winning the International Member of the Year award, Daniel will also serve on the Corfac Executive Committee next year, which I'm thrilled to say that he's going to do it, number one, and that we'll have great international representation. And the executive committee, for those of you who don't know, is made up of 9 people, and they kind of run the day-to-day, so to speak, in between the board meetings. So we look forward, Daniel, for you doing that. Thank you very much. And that's about it from here.
Okay, great. And the next conference, of course, is in Las Vegas in March. I think it's March 2nd to 5th. And the spring conference, and I hope that the international contingent, I'll go out of my way to do some calling to make sure that we can get a good group together, because it's a great opportunity, not only for the international people to get together, but I think there's 3 reasons for why you join Corfac, the 3 Bs, right? And going to a conference achieves them. It's to be smarter, because you can get information from other people. You can ask questions. Surely other people within Corfac have been in the situation that you've been before. It can help you. It's to be bigger, to be part of a global network, and of course, to be busier, to give and get referrals. Charlie, you know, an example of a very good example.
It's 4 Bs, isn't it? It's beer as well.
I was going to say be bold and then talk about that, but if you want to be very clear, yes, exactly. It is the 4 Bs. And all of them can be achieved in Las Vegas in the spring. Particularly, I think it's really actually important for the international group to make a presence there, because it will be the first time in probably 2 years that we've really been together. And I think that it's an opportunity. It's not only for us to be together, but it's for us to be together with others, because that's where business really gets done.
Is there going to be a concerted effort to choose one or the other, or is Seattle or Las Vegas, is one or the other easier, for lack of better terminology, for the internationals to get in and out of?
I think Las Vegas is pretty good. You can pretty much go through Chicago or LA, whether which direction you're coming from, even if there isn't direct flights. And as Charlie said, the beer offering there should be pretty good. So there's reason to be there. Many reasons.
It'd be great.
I would prefer that be booze. We have a classy operation. We have all kinds of alcohol, not just beer.
Okay.
So
okay.
B could be booze, please.
Okay, the 4 Bs.
I'll give you a, speaking of booze, haha.
Yeah.
I'm headed out Monday morning to go see one of our newer affiliates, Louisville, Kentucky, to a town I've never been in, but also happens to be probably the international headquarters of bourbon. And we are fortunate enough that I'm going to, with the principals, we're going to take a little tour of the Maker's Mark Distillery on Monday. So should be fun. And of course, Tuesday morning, I'll be giving my presentation and doing, you know, real work, hopefully.
Yeah, good shape. That's great. As always, with respect to potential affiliates, if you have some, we've identified some through the SIOR network, and we're going to try to follow up with them. I'll follow up with Jonathan, and we'll make a plan there. So that's something which is in hand. The the budget, I think, anything to say on the budget? We do have an expense coming up, right? That's the Amsterdam event.
Yeah, so I mean, I put that on there only because, shortly we're going to start talking about the 2022 Corfac budget. So if there are things, Daniel and Ray as chair and vice chair and others here, if there are things that you would like to see in that budget, let us know. I mean, right now, the majority of the Corfac International budget is spent on Expo Real, but there is money available, and we're going to use, because our friends at FRIS said there was a conference that they could use some exposure and help with, and we're going to do that. It's in about a month in Amsterdam. But if there are things like that for any of you here going forward in the future, whether it's a conference, whether it's something media related, whether it's a wacky idea that we've never done before, give it a little thought.
It's a great idea. And actually the Provada 2021 in Amsterdam is a real estate fair. I think the number of the Dutch companies go there, but what's interesting about the Dutch companies going there, as well as some others, is that they have a lot of international business, and the ability for us to promote Corfac as an international group gets us to put our name and our locations in front of people who are known to be investing abroad and doing business abroad. So it's actually it is a local fair with an international focus, and therefore it's interesting for Corfac International. And actually, it's also an example of how Corfac International budget is used to promote Corfac members in their local market and others too.
Are we doing it like a booth in there, are we, Daniel? Is that?
Yes, exactly. Yeah. There is a booth there, and we've been discussing how we can brand it with respect to Corfac and make sure that we can put the regions on, and hopefully we can even have a link to the various locations as well, meaning the individual firms. So everyone can be there. Another thing, the investment sales call, that was actually a request, I believe also from FRIS, our colleagues there, who wanted a call for a more European focus. And I'll turn it back to you, Jonathan, with respect to, is there a date which has been agreed? I think not yet, right? But
no, I think we kind of left it in the open, and I think it was discussed trying to do it in October. But I can, after this call, I can throw out some dates to everybody and see. I mean, I would assume, does this time work well for you guys to do something like this? I mean, we could do it earlier, we could do it later. You let me know. And then just figure out, when it's going to be. But I would say at this point, maybe push for the second half of October.
Okay, good. Just to cover a couple of other topics before we get to Charlie. Branding, if anyone has any suggestions, please ask within your organizations or yourself, because as Jonathan mentioned, we do have a budget, and that's what it's for, if we can find ideas to benefit all of us.
And speaking of that, so Daniel, when I put that on the agenda and sent it out to everybody, I was looking at it this morning going, why did I put that on there? And so Joe did a great job in Chicago last week. During his opening session, he actually said to everybody, he goes, take out your phones. And not only did he tell people to download the Corfac app, which I hope you all have done, because it provides everything Corfac at your fingertips. So our numbers, Joe, and I haven't told you this, so when our Corfac app downloads were at about 320 prior to Chicago, and now they're about 360. So the numbers have popped. We're going to do another campaign to push that harder with all of the members. But 360 is really good, because while Corfac has 900 total members, probably 700 to 750 are actual brokers and practitioners. So we're climbing up on, half the members having downloaded it. And then the other thing Joe did, and Joe, you can speak to this obviously, but he said, go on the Corfac social media channels and share that you're in Chicago, that you're here, part of the conference. And our social numbers on LinkedIn, Facebook, et cetera, have popped as a result of that. So
Yeah, so basically, I was explaining to him, I mean, we go through all these meetings, and I really wanted to redo a lot of our ads this year going in. I thought we had, the print ads that we had done, kind of, run their course. And staff and communications department and Patricia and Jennifer worked really hard on coming up with a new ad campaign. And I think it's really good. I mean, I don't know if you guys have noticed it yet with the glasses and the clear view, but nobody was seeing it. And the problem was these things were getting posted and we were getting 5, 6 likes. And I said, that's, there's 1,000 of us or 900 of us or 700 of us. We need more than that. So I encouraged everyone. We even had directions on the table to go and like our posts and share our posts. And, they're created for us to use as marketing tools. And if they're just sitting there without, being pushed out or being seen or liked, they're just a waste of money. So, I would encourage you guys to do the same. LinkedIn was probably more of our focus where we've been driving more of our dollars, business to business related stuff. But of course, Twitter and Facebook as well. And Charlie, I know you're great. I see you do it all the time, and several others will do too. But just be a little bit more consistent. I know it's hard. We're all busy. You might not get to check your feeds every day, but when you do, go through it and like stuff and read stuff and forward stuff that that you think would be your clients would want to see and would be beneficial to you from a branding aspect or knowledge or thought leader or anything of that sort. That's my pitch. That's all. I'm done.
Thank you. I think we're up to you, Charlie, to tell us why the market in London is just going like hotcakes.
I'd love to know what news you'd be reading, but yeah, I think Ireland's a bit better, isn't it? I first and foremost, I know I just wrote down there's only really outside. There's not many of us on here. How are we going to get more people to be more in the Europe? Because I always struggled when I was chair before Daniel, just trying to get more people into the calls. I know there's always a consistent theme, but I really struggle because I'm very happy just to go through everything and tell everyone, but it's you want a bigger audience, don't we? And that's a killer for me.
First, Charlie, feel free to make it an abbreviated form. That's quite all right. Secondly, one of the things I think people get busy. It's always the case. You get busy and you do something else, and so it's easy to oversee it. And I think a couple of the expressions that we've had, we really need to bring home to people. And the way to do that, frankly, is for me. I didn't do it this time because I actually thought we had a reasonable positive response. But now I've learned that even with a positive response, that's not enough. I need to make phone calls to individuals to remind them that they need to, to participate. Because I think we've talked about think Corfac first. We've talked about treat Corfac as a client. And I think that the best way to get benefits out of Corfac is to participate and to be known within Corfac. And that's why it's important to go to conferences, for example, because there you can do the 4th B with people and people will remember that if they can the next morning. I mean, Joe, look how good he was the next morning, or will be coming up. So I think you get a lot of benefit. I mean, let's face it, Charlie referred a transaction to me. We got to know each other, Charlie. We didn't know each other. We got to know each other by going to different conferences in the States, in London, in various places. Charlie referred a transaction to me, which has given birth to more. So one transaction was done, that one's done. Charlie, I can give you a brief update. We're working on a lease and a sale on a second building, which is there. And we have a meeting on Tuesday. Cross your fingers, make sure they're crossed so much that the blood stops. But on Wednesday, if we get a yes out of that, then we've actually got 2 deals out of that same thing. And that's a referral. So that'll be 3 transactions. And I can tell you there's 2 others. The other 2 are rather small, but that'll be 3 big ones and 2 small ones just because we got to know each other.
Yeah. Well, it's the same with Ian's referred something to us, which I know Ian will come back to you next week, but it's opportunity stuff. And Bill's done something else for us, which I haven't been able to get back hold of him. I hope he's okay, but I've called him a few times. But it's, it's starting to show some shoots now because I think we were in a bit of a lull. I think all of us were for quite a while because nothing was going on. Then suddenly we're getting all this stuff coming across across Europe mainly. America's always a bit harder, isn't it? But we'll get there one day, I think. It's the important thing.
Yeah, and Charlie and Daniel, you hit it on the head. I mean, the response to this call was good. A lot of acceptances, and people didn't show up, but we're recording this, so I'm careful what you say, Charlie. And we'll share this with all the European leaders of the firms, and hopefully they can distribute that to the folks within their offices.
Well, it's such a shame they can't be asking questions. I think that's the important thing.
Agreed.
Never mind. They lose out. We win. Right. Let me share my screen. I'm not very good on Zoom, so bear with me. Does that come through?
Lovely.
Okay, let me go to page 1. Is that on Central London? Is that what it says? Yeah. All right, cool. So just a very quick, I will skim through this, if that's all right with everyone. I think London in itself is improving. It's still been very slow since the lockdowns we had. The summer I haven't seen. Actually, I wouldn't mind Ian jumping in now and again on this, but because it's for similar markets. But I'm just wondering, I thought the summer was one of the quietest markets I've ever seen, to be brutally honest. And we were hoping for a lot more recovery in September, and it is starting to come through. I think is the easiest way to say. Tenants are, which is what we concentrate on, is offices. The hybrid way of working is what they're looking at, and so we've seen lots of space coming through. Second-hand space, which is poorer, which will always be harder to let. So there's a lot of poor space in the market, but the space which is very, very good is letting and getting some very, very good rents, even pre-pandemic and better, which is encouraging. So some of the rents in the city on the top space are hitting £100 a square foot, and then I heard of one rent in the West End, which is in sort of St James's, Berkeley Square, and it's there's a rent of over £200 a square foot. So there's an all-in cost for a tenant. If the rent's at 200, your business rates will be 100 roughly. And then service charge, that'd be £310 a square foot. It's mad, absolutely crazy. Retail got a kicking, as we all know, across the globe in the pandemic, so that is starting to make a recovery, which is great. So the high street is busier. People are back since the second week of September. There's queues at the door now for the retailers which are still open, which is encouraging. And obviously the investment world has returned as well, and it seems it's really picked up, and there's some opportunities out there for people to buy. Just moving on to sort of availability, as I mentioned, there's been a lot more space come through, and obviously not many lettings out there. So we originally on across London was 5%, which was always sort of not historic low, but very good, confident market. And we're sort of nearly hitting up to double figures now, so touching on 10%, which is what we would probably expect now. And there isn't much more bits coming through, if that makes sense. We can't see, it's really slowed down on all the secondhand space coming through, and a lot of it is actually more city and Canary Wharf, if you know those markets at all. That Canary Wharf is sort of a little Manhattan. It's American theme led, big towers, and a lot of space is coming through there, unfortunately. And what we have seen with the availability is that the under offers is increasing, mainly in the city, with some really big lawyers taking space, and other bits going under offer close to our office here. Hogan Lovells are taking 300,000 square feet, or just about to, and there's loads in the city going on of hundreds of thousands of square feet. So it's encouraging, really encouraging. I think I've probably covered some of this. Yes, I have. So Latham Watkins is a pre-let of 250,000 square feet in One Leadenhall, which is one of the new buildings in the city. And I think that we are going to be, you'll see, because it's been so poor, but every quarter will be better on and on every time going forward of take up, which would be great to see. And there's still a load of activity of square footage out there looking for space, but they're all sitting on their hands because they're not sure exactly how they want to work. We've just done a letting of 6,000 square feet, which isn't massive to a firm of lawyers who've got 100 staff. Obviously, not everyone can fit in that space. And the day the lease signed, they said, can we take the other side of the floor? So now they're taking another 6,000 square feet. because they need the young people need to come back to the office. I'm sure you all know this. I won't dwell on it, but and they need to be trained, and that's a problem which a lot of these guys are finding, and retaining quality staff as well. And then we've obviously got lots of demand still looking for the long term. So these are the pre-let guys driven the bigger requirements. So that's quite a lot of space of 4 million square feet of a multiple of over probably 50 firms looking. Oops, wrong way. Just on the investment, not that my speciality, but you can see in just the highlight boxes there, the year to date up to 4.3 billion on transactions, which actually, think about the first 6 months, it was just awful. It's actually not too bad, and there's been some big kit sold and bought, and there's some further bits which are under offer. But a lot of these investments have been kicking around for a while. So Ian, I don't know whether you've had that with some of your bits you've been selling. It's sort of, they've been around for a while, but what's your thoughts on that, if you want to jump in?
Yeah, no, we would have seen exactly the same. I think that we're going to probably hit about 3 billion in Dublin. That's in euro, obviously. But yeah, we have had an awful lot of stock sitting for quite a long time. One of the things I was going to ask you, Charlie, just on both the letting side and perhaps the investment side, was just around ESG and sort of environmental and social. We're starting to see deals, that's become a lot more than box ticking now. People are actually taking it very, very seriously, and some deals are collapsing because, vendors or landlords can't prove their ESG credentials of the building they're trying to let or sell.
We go. Yeah, sorry, I can unmute myself. A lot of buildings now, if they don't have an EPC rating, which is like the energy performance certificate, if you have to be a certain level in the next sort of 5 to 6 years. So a lot of the funds which are holding these poorer quality assets are selling them off, and then whoever's buying it, they need to improve it and make it better. So there's a lot of people who, sorry, my colleague's shouting on his phone. It's harder for them to spend more money on getting a building through, making it through the hoops. But yeah, I mean, it's ESG stuff is it's prolific across everything. That every investor's looking at it really hard, and every new building coming through is net zero carbon, and all, they just try and get the right flow. But I think a lot of the buildings which have come through are really poor as well, though, Ian. So people are buying them to improve them. The new buildings people are holding, obviously, to let up and sell maybe then, if not, they'll keep on to them. But it's so key on everything, and also due to the pandemic and Brexit, the cost of construction is just going through the roof, and getting kit and getting the right kind of things for your buildings is just ridiculous at the moment. I mean, absolutely crazy. Because all our, not being flippant in any way, but all the sort of overseas builders, which we had, the Polish and Romanian and all sorts, they're just, obviously they've gone home and they're not coming back because they've gone to Germany and other closer to home places to work. So yeah, it's interesting to see what will happen over the next, but yeah, your point's valid. Leasing wise though, it depends how big it is. If it's a big building, then tenants will, as in a big requirement, tenants adhere to, and they want certain boxes ticked. It used to be the old BREEAM listings. Now it's moved on to other wellness certificates and things like that. But most of the smaller stuff, that tenants don't care. They just really want good quality space, air conditioned, open a window, and a bit of outdoor space if possible, and showers and bikes. And obviously nice everything else, but that's about it really. Let me just move on to the next, wrong way again. And just all the key ones. So there's been some really good deals happened actually. So Kaleidoscope is a new building which is built above one of the Crossrail tube stations. So TikTok took 88,000, but they've also got an option on another building which is the same landlord, which is 120,000 square foot around the corner. So that's good. So Bank Street, Apple took 66,000. Not sure why they went down there, but it's probably just cheap and cheerful, to be brutally honest. Talked about the pre-let, which is well, it's actually typo. It's 250,000 square feet. Bloom, this is under offer, so Snapchat. This was under offer pre-pandemic to a bank, Rabobank, and another tenant paying £100 on the top. But Snapchat had taken the bottom parts of this building, and it's HV Revis as well, who are the developer there. And that's, that's just around the corner from our office, and it's beautiful, to be fair. It's stunning space. And then on investment deals, there's been some big, huge ones which have happened this year. So Brookfield have purchased 30th Venture Street, 635 million, and obviously Minster Building, you can see Suntex overseas, and then Union's Germany, I think, isn't it, Ian? I think you probably know more than me. And they bought just around, again, not far from us as well, an EC1. So it's, half of
German.
Yeah, 500 million. So, there's been some big deals, which is encouraging, and they will. There's a lot more churn of investment deals coming through, though. The smaller side of things, but some, big. There is still plenty of money flying around. And then just, I've gone the wrong way again, and that's it. So I just couldn't make it today, unfortunately. But yeah, I'm done.
Charlie, if I may ask, you mentioned buildings that are older buildings that are not up to ESG standards or environmental standards, EPC standards, that need to be refurbished. There's a lot of them in the market. What percentage of the market would that be? And are the typical buyers the smaller buyers, not the institutions who aren't going to put in that effort to take it?
Opportunity buyers, I'd probably say, which there's a few overseas. For example, 2 years ago, a Hong Kong guy, Neo, he came into our market and bought 2 big buildings, which no one else is touching, and paid way too much for them. And now he's got 2 buildings which are sat there in really poor condition and not being able to let because he realised he spent too much money on them. And then there's other buildings which are, as percentage wise, I don't know, it's probably half. So there's, but they're all on the smaller side. So these buildings tend to be around about 30,000 square foot and below. So the bigger ones, obviously, they have proper landlords who look after it and update it. So it will change. Yeah.
And Charlie, how are tenants? One thing we're struggling with here is just advising landlords on new developments, where there's a sort of feeling that people should maybe be, as you mentioned there, more outdoor space, bit of natural ventilation, with COVID and everything, and for environmental reasons, and so we're getting developers who are tempted to move away from a sort of traditional, 4-pipe plank coil M&E arrangement, but everybody's tempted to move away from it, but nobody actually wants to, because the tenants kind of say they want environmentally friendly buildings, but ultimately don't seem to take the buildings, or their M&E consultants will not bless buildings that don't have the kind of standard, if you will, spec. I mean, has anyone in London, to your knowledge, dared move away from the sort of traditional?
No, there are different types of air conditioning, which are more greener than others, like a chilled ceiling or a chilled beam, but they're bloody horrible to use. What they are using is technology, though. So I think technology is key for all these creative smart buildings. So we've got air rated, which is a certificate thing, but you can buy these what do you call them, gadgets which put them in every room, and they monitor the air density. So the reduction in oxygen, and they're dotted around the offices and in meeting rooms, and they're attached to the air conditioning system and fresh air system. So if it's low, they pump more fresh air in. So that sort of so everyone's on the same balance, because you know what it's like in the afternoon. Everyone's a bit tired. It gets warmer. Even if you've got 4-point air conditioning like we have, and it gets tough, but it's a lot. It's just everyone's going smarter, Ian, and I think that is how it's going to change. I think that the new developments, they've all got 4-pipe or a different variation of it, VRH system, which is slightly greener, but they all no one will not use it at all. They will always use the same system, but it's just a change of how they can make it better for tenants. Opening a window is fine, but then it messes up the air conditioning system, as you well know. So, you know, we can't open these unless we've got a big Allen key, which we don't have. It's tough. It really is for lots of them.
I was kind of hoping our own building was going to come back into fashion where the windows are so leaky that with natural ventilation by accident.
Yeah.
That would be the newest form of new property tech, leaky windows.
Yeah. Yeah, there's loads of different things coming through those. It's all the tech driven stuff though.
No, thank you.
I was curious if you can share any experience on the land side, if you either of you are working. Here in Romania, to us, it seems that the market is a bit messy, and I don't know if this is a general thing or if we are newer on this market. We tried to buy a land few weeks ago, and it is you know, with a bid, with a crazy system. Is it the same for the good lands in your countries? Maybe there are lots of money put on hold and now they want to secure good lands.
Well, we tend to be more of building sales around here than land, but there's loads of money flying around in London. And Ian seems to be selling loads of stuff, so there must be plenty of money in Dublin. But yeah,
I sold a couple of sites there recently, and yeah, happily, people seem to be chucking crazy money at sites. You know, they've gone an awful lot stronger than I would have expected. You know, so I mean, I think there is a lot of people trying to, you know, access land in order to be kind of ready for the next cycle, and people are anticipating a bit of a boom, you know, as economies come out of COVID. So I mean, hopefully that's the case. I think rental wise, you know, we saw rents in Dublin come down a bit, and they've now really sprung back up in much the same way as Charlie had said.
All right. Well, Charlie, thank you very much. I guess your reflection of your market is somewhat a reflection of our other markets as well. To get in prime, you mentioned 3.5 to 4% in the West End and in the city, so those are prime locations. And to get returns like that, it's actually, from my perspective, rather healthy compared to what we see here. So it's
what do you see there, Daniel?
Well, if I make the equivalent to a West End or a city thing, 1 to 2 would be the equivalent to a 3.5 to 4. It's 1 to 2. Their margins are extremely. You know, you miscalculated on a roof repair or something like that, and you've missed any profitability, right? So, you know, 1.1, 1.2, these are returns which buildings sell at here in such locations as that.
Are people basically just looking to park money somewhere where they feel there's some safety and it'll hold its purchasing value as opposed to trying to get a decent return?
Yes, very much so. That is very much a part of the market. There's still the traditional real estate investors who want to do good and make a good return, but we're also dealing with negative interest rates. If you are a large company, a large corporate or an institution, meaning you have a significant cash balance, the banks here charge negative interest. So it is actually better to buy something at a 1% return. It's just that you're taking obviously on different risks. And in particular, if you don't actively have a portfolio already, such that you've got the team to manage it, you're taking on sizable risks buying something at just over a 1% return.
Which other countries still have negative interest rates? Did Germany have them?
Yes, Germany has negative interest rates. Yes,
okay.
Exactly.
Yeah, banks in Ireland are charging for deposits as well. Sadly, our yields aren't quite that low, so you need to send some of your clients over here, Daniel,
Yes,
return.
yes, exactly, exactly. Actually, we have been for clients who are not being successful in placing their money here, or also want to go elsewhere. We've told them that these kinds of returns, they do have their inherent risks, and they should be looking elsewhere. In fact, and be happy to do that, because it's
aside from specific real estate, I'd be interested from everybody on the call or whoever wishes to speak to it, what's just the general level of optimism or uncertainty in business in general?
For us here, there is an optimism that we will get over this pandemic, and maybe we all have to walk around with a vaccination certificate. People here talk about an annual shot. It will be a combined shot. It'll be an annual shot plus some whatever virus thing, but that will continue on. And to be perfectly honest, we actually went through the COVID pandemic, I would say, on a COVID light basis, at least in compared with other European countries. We had a lockdown, but our lockdown was that the government recommend that you stay at home and work from home if you can. When I went to work, I drove to work every day, and on the highway, there was a sign, the reader board said, the one that usually tells you to slow down or whatever, said something to the effect that consider staying at home, and I should consider it. I considered it and I went to work, as did most people here. So we had it rather light, but I do know other countries, Spain, Germany, France, elsewhere, the lockdowns were, Italy, extremely hard. And I mean, imagine people having to stay at home in small apartments and work from there with families and all other commitments that they have. So for us, it's, there's been a level of optimism, and that's been continuing here. And I'm hopeful that in other markets, which have had even a more stringent COVID response, that we will get this boom, and it will move on and do well. The big elephant in the room, I suppose, is whether it's the European Central Bank or the US Fed or elsewhere, they're making more than a little bit of noise about increasing interest rates. And we all know that that has a tremendous impact on the real estate market. So that's something to take into account in the near future.
I think just for us, absolutely what Daniel said, but it couldn't have got any worse, really. Half the firm's gone, and and income obviously is halved, but it's we're seeing loads of shoots of recovery. It's great. It's really exciting to be back at work, to be brutally honest. So we will recover. It'll take a while. I reckon there's another 18 months of hell, and then we'll get through it all again.
I hope it's not 18 months.
Wow.
I was thinking I am optimistic with 6 or 12 months, but 18 is.
I hope not.
So in Romania also it is a sort of light coming back of people, although we are aware that the big coming through will be taking place maybe in the spring, we hope for. But some companies are already back to work, and the residential market is booming. The industrial market is also very strong and going ahead. So I think there are good chances for us in the mid of 2022 to be back on a nice track. Things are getting better from now.
Yeah, and again, I mean, it's similar in Ireland. We had one of the harsher lockdowns. The pubs are reopened, thank God.
That's important.
The last of the restrictions will be removed, I think, 22nd of October. So, there'll be no social distancing, etc., required after that. So hopefully we'll get through the winter without any sort of reoccurrence. But certainly the economy here has bounced back very, very aggressively. I think Ireland's growth is has been way ahead of most of the other European economies, and that really just reflects the kind of tech-based, we're based in almost an economy based entirely on tech and pharmaceuticals. COVID's actually been pretty good for us. You know, it's really fed back, and town is very busy. The traffic's a nightmare again. Yeah, we're expecting things to continue in this vein.
Well, in Germany, people were allowed to go back to work starting July 1st, and many people did so. Those who wanted to continue work, remote working, try to do this because sometimes it has an advantage. People are very busy now and enjoy that they may go out again and so on, and this can be seen everywhere.
Good. And the same thing in Toronto, Ray, your area?
Certainly, the industrials continue to be very strong. Like Joe mentioned, industrial rental rates going up astronomically just this year alone. Residential market still very strong, but lenders are getting more concerned about it, potentially a bubble. The office is still very uncertain. A lot of people still remaining working from home. Some people back in the office, but still modified work schedules, only a portion back. Very few cars in the parking lots as a percentage of what would have been there. So just trying to get things back going, still a little uncertain. When the US border opens to Canadians, that will help as well, hopefully in October, late October.
Good luck to everyone in their market. In keeping with good Swiss time, I want to be
Hey,
sure that we
Dave,
yes.
how's your vaccination program? Is it gotten better? Like, I know Sandy's not on this call, but is he able to get vaccinated now? I mean, if you guys all, I know that was a concern because here in the States, you can walk in any pharmacy and get one now if you're not already vaccinated.
Yeah, it's readily available here. It was slower than the US on the initial supply,
Right.
but yeah, our total figures are higher than the US at this point of those that are double vaccinated.
Excellent. Cool. I'm just curious. Sorry, Daniel, again.
No problem at all. Just for your information, the country that wins the award now with respect to double vaccination is Portugal. It's either 83 or 86% of the population is vaccinated. And it's the reason why it's 83 or 86 is because the under 12-year-olds don't get vaccinated. And there are some people for medical reasons who aren't. Otherwise, probably of their eligible group, they're high 90s. I'm looking forward to Expo Real. I'm looking forward to seeing many people there. I'm looking forward to seeing you, Joe, there, hopefully, if that comes to pass. We'll have another one of these calls. Charlie, I heard what you said. I'll do better marketing next time for our next call. I propose that be actually in January. I think if we have an investment sales call.
I wasn't having a dig. I was just as a general.
No, Charlie, it's
but please take it personally.
It's already noted and it's a useful point.
Take it personally and fall on your sword. There we are. Job done.
Good. Absolutely. Thank you.
I'll throw this out. I mean, you guys are allowed to come in November. We're having another big event in December at the ICSC in Las Vegas. I know it's unlikely, but obviously the invitation is there to anyone who would like to attend. We would love to, take care of you if you're interested in coming to the big retail show in the US in Las Vegas. It's the first week in December.
Great. And two things for 2022 to note, of course, is March in Las Vegas for the Spring Corfac Conference. And Ian, we haven't forgotten that there's a date in July for the Corfac European affiliates to get together in Ireland. And you're not off the hook on that one yet. We're hoping to be there with you.
Oh, no,
and
well,
we'll work on the we'll work on the fourth of the 4 Bs.
Yeah.
And if any of you do want to come to Vegas, maybe you can come see Carlos Santana with Jonathan and I over at the House of Blues again. Thanks, guys. It's been great call today. I appreciate it. Thank you, Daniel. Fantastic.
Thank you, everyone.
Thanks, everybody.
Thank you. Thanks, everybody.
Good seeing everyone.
Bye, everyone. Bye.
Good luck to all.
Bye.